Hi guys, this is Teacher Party. Welcome to my YouTube channel. Bo. Welcome, welcome, welcome. Okay, guys, we are doing examples of liabilities. Still on the conceptual framework business. Now I'm talking about business. Don't forget to like and subscribe in the meantime whilst I'm doing some interesting things in my slides here from the current slide. Okay, guys, examples for liabilities. Remember, we've done examples for assets, income, expenses. So this is the last one. Ne? So the first one is trade creditors or payables. Ne? You know me and Mr. Price, guys. You know me and Mr. Price. It's so good bang to me and no. Okay. So if you look here, from this article, it's talking about TFG. I think it's Stress and Foschini. Okay, so let's read here. Even Mr. Price, which caters to more price-sensitive, lower income consumers than TFG and Truworths. Okay, the lower price consumers, is you guys doing first year, is in, because it's still living parent allowance, is increasing its local content. Mr. Price now sources 35% of total merchandise units from South Africa, which is worth about 9.2 billion in retail sales. That's up from 31. That's up from 31% in 2015, which at the time it totaled 3 billion in retail sales. Whilst China still represents 4.85% of Mr. Price order book, the group is refocusing its energy on the South African market, which accounts for 92% of its revenue. It exited Australia and Poland. So this article was written when? Let's look at this. So written 2020. So by 2020, Mr. Price was still getting some of its supply, some of its merchandise. Thank you. From the local market, which is South Africa, and which is getting some in China or in Asia. That was 2020. I stand to be corrected. So when Mr. Price, ladies and gentlemen, is buying merchandise, like, why did I close? Why did I close? So when Mr. Price is buying, how Mr. Price, in fact, Mr. Price is buying shoes and all these accessories from maybe locally or from Asia. Ladies and gentlemen, Mr. Price will not buy one shoe. Okay, they'll be buying the same type of this shoe, different sizes. Maybe they'll be buying 100,000 units, or they'll be buying 1 million units of these things, because when the shipment comes, then it must be distributed to different shops all over South Africa and the SADC. So really, they'll not be buying this shoe to deliver to you. They do mass buying. So when they buy in bulk, they are not paying the manufacturers same time they buy. They've got arrangements. They pay over 30 days, 60 days, 90 days. That's the relationship they have with their suppliers. So that inventory that is purchased on account by Mr. Price from the manufacturers now, it sits under trade creditors and payables. So I hope I made the explanation very practical and very easy for the trade creditors or trade payables. And then the VAT output. So when you're buying this shoe from Mr. Price, Mr. Price is a registered vet vendor, I would assume. Oh, sorry, guys, you're not supposed to see the other thing. I was not aware that it's there. Let's go to the babies. Okay, so when you're buying this t-shirt, it's $79.99. Guys, that's already including VAT. Ne? So when you give Mr. Price $80 in exchange for this shirt, they've already calculated VAT, and then they need to take it out. Maybe what is going to them in this case. It's almost $70, ne? $10, they're holding it for the receiver. They need to pay tax on sales. So that is your output VAT. So they need to pay that over to us. That's why it will be recorded, ladies and gentlemen, as liabilities. But I do have other videos on VAT. Please go through them. I made them last year. It's a very detailed video on VAT, okay? So shareholders for dividends, okay? So shareholders for dividends, when they are declared, I can close this. So when dividends are declared, it's after the financial year end. Ne? So for example, here it says the interim dividend is 279 cents per share, and it's based on the ratio. The dividend has been declared from income reserves. Ne? So be careful. When a dividend is declared, ne? Look at the financial statements. When a dividend is declared, it will be declared on the profits attributable to the shareholders. Ne? Sometimes it will be declared on the reserves depending on what the shareholders agree on. Okay. So by the end of the financial year, dividends can only be declared but not paid. So they will be paid maybe after a month or two or after the AGM. Remember, the financial statements, if they are done, if they are for 30 June, chances are they'll be July, it will be entering some of the remaining entries. Then August, the auditors are coming. By September, that's when you'll have those sort of Fs done after like around about 3 months. So when you declare a dividend, it's already, it's already after the financial year end. So that's why the declaration is always sitting as a payable. A dividend declared is always sitting as a payable. It will only be paid later. Okay, so we've got accrued expenses. So accrued expenses, okay, let's say, remember that example we're talking about of Mr. Price having leases or renting at malls. And then sometimes Mr. Price can be like, okay, I'm gonna rent for you, my friend, 5 years, ne? But I'll pay the deposit to move in. I'll pay you the rent money after 8 or 10 months. What happens on the months where rent is due but Mr. Price has not paid it? It will be recorded as an accrued expense. So income or bank unfavorable. So once the bank goes on a minus, it's declared as an overdraft. Ne? So it is a liability. SARS income tax payable. Ladies and gentlemen, the SARS income tax and the VAT payable. SARS VAT payable is the same as the output VAT. That's what is owed to SARS. It's not the same in terms of, but okay, SARS VAT payable, it's your output VAT minus your input VAT. Then you get the VAT refundable or payable. But it works the same fashion as the VAT output. You are owing SARS. Okay. And then short-term portion on long-term loan. So if Mr. Price decides to buy a building or buy an office block, and then they pay mortgage over 25 years. So the short-term part that must be paid next year, the installment that must be paid next year, it will be recognized as a current liability. But it's still the mortgage and all that, it's still a liability. The long-term loan, it's still a liability, even though it's non-current. So in the examples of liabilities here, let's add mortgage loan, because here it seems to be short-term liabilities, mortgage bond. long-term loan. You just okay, so okay, so I did explain the mortgage bond, the long-term loan when I was explaining the short-term part. Touched on it. Income received in advance. Guys, I'll have a separate video for prepaid expense, accrued income, income received in advance, and accrued expense. I think yeah. Accrued income, accrued expense, income received in advance, and prepaid expense. Yeah, I'll have a separate video because, ladies and gentlemen, I want you to be wise when you come across those things, because usually those things are very interesting when you come across them in the exams, because many people end up saying, no, this is an expense, not even understanding that, no, it's actually a prepaid or an accrued. Okay, so income received in advance. This happens when a customer is paying the business or the entity before they perform a service. Okay, so take this thing at Mr. Price, the gift card. Ne? Remember when you buy a gift card at Mr. Price now, those were lucky who got some gift cards yesterday. It was Valentine's. Maybe the boyfriend bought the card December. Then they put in 500 or 1,000. Then they give you in Feb, they say, ta-da! So Mr. Price was holding on to money, December, that has not been spent. So he can actually rock up at Mr. Price, say, by the way, I want my money back. The rent is not balancing. I don't know if they give you my money back from a gift card or they say we can't, you must take anything here from the shop. I don't know. So the reason why you see it as a liability is because you can still want that money back. You can still request it back. So guys, I hope this makes sense to you and you understand liabilities much easier now. Thank you.